it's intriguing. The economies of scale make it really intriguing to get into commercial real estate, but you hear all these things about commercial real estate that's like, the value of the dollar is significantly decreased, but like, how many properties did you buy as a bartender? And then also, like, what was the strategy? Was it you had a private investor who was funding these deals, and were they mostly buy and holds? I'm just curious about getting started in the beginning.
Stepping stone for me to go out and buy my first property. So about 14 months after, of us working together, or me working for him, I guess you could say, private investor contact that David had helped me formulate over that year of him and I working together, and bought that first property. I've run my show for over 11 years, and so you can download it on our company website. That's investwithsunrise.com. Again, investwithsunrise.com. You can see our offerings that we have, see past deals that we've done. We got case studies that we share up there.
All right, Kevin, welcome to the Wealth Juice podcast. We're excited to have you on the show today. We typically, I was just saying this prior to going live, is that we don't talk a lot about like heavy into commercial real estate on our podcast, which is why, one of the reasons why episode 3, we're at 330 now, I'm excited to dive in with you because, it's intriguing. The economies of scale make it really intriguing to get into commercial real estate, but you hear all these things about commercial real estate that's like, there's all this negative towards it. You have buildings that are $250 million selling for $5 million. And I'm sure you can debunk all this stuff, but I'm excited to have you on the show. So I appreciate you coming on, man.
Yeah, Corey, first and foremost, appreciate you having me here. Excited to be here today and talk shop. But yeah, we can get into the nitty gritty and go down some rabbit holes today, I'm sure.
Yeah. So you mentioned just prior to us jumping on that you're like many moons ago, you got started in the residential space. I don't know a ton of people that dive right into commercial. They end up there because it makes a lot of sense. But I'd love for you to go back and talk about the beginning of your journey. Like, why real estate? Why even go down this road that, many people think about, not many people do. So just talk to us about your start and why you felt like it was advantageous for you to buy real estate in the first place.
Yeah, no, absolutely. Well, I mean, I always start by saying, like, I'm really grateful that real estate found me. I didn't find it. It kind of found me at a very opportune time in my life. I was 19 and I was going to community college, not really sure what the hell I wanted to do with my life. And, I was always entrepreneurial at a young age. From the age of 8, I was mowing grass for my brother and I had chores around the house, but they would take the lawnmower and go mow neighbors' lawns and make money. We'd shovel snow in the wintertime. I had a paper out at age 12. And long story short, like, I've always done something from a young age to make money. Grew up in a not a well-to-do household, but just both my parents, working parents. We had enough, not extra, but if we wanted something, it was Christmas or birthday, right? Like, you had to wait till those holidays came around to get, whether it's the coolest, latest BMX bike or, sports equipment, anything like that. Right. And so from a young age, I just knew if I wanted it, I would have to go earn it, right, and find my way to come up with the funds myself to acquire it. So, and that just, once I graduated high school, I was like, man, I saw a lot of my friends were going away to university, and I just was never really academically driven, even in high school. I didn't have anyone in my life that ever showed me, like, how is this? If you can't ever show me, even today, if you can't show me how whatever I'm about to learn is going to be applicable and beneficial, then I have a hard time getting on board with it, And so way back when, I didn't have anyone to ever really guide me as to, like, hey, this is why you need to do really good in high school and go to college, because this is how it's going to apply later on in life. And so for that reason, I wasn't overly excited to go away and burn up 4 years and party a bunch and probably waste my parents' money. So I went to local community college, really not with an idea of what I wanted to do, and just hoping that the universe would bring me something. And 19, I met a gentleman by the name of David. He was a local real estate investor. I met him because my girlfriend at the time was, her mother was dating David. And so he just happened to be a local guy. I was intrigued by David because, like, how he presented himself, the cars he drove, he was a business owner. I've never met a business owner. My parents didn't have any friends that were business owners. That was just like an alien world to me. And so I got to know David over the years, or over the months, first couple of months of just seeing him over at my girlfriend's house. She still lived at home at the time, and I got to become friends with him. And he was about my parents' age. I mean, he was like 25, 26 years older than I. And long story short, he invited me to a conference. I didn't really. He told me what he did. He owned rental properties, single family and small multifamily stuff in the town I grew up in, and that was what he did. Like, that was his business. He lived a lifestyle based on the cash flow that those investment properties produce. He had been doing it for 20 plus years. That in and of itself was intriguing to me. I didn't really understand the business. I mean, I understood he owned stuff and people paid him to live there, but that was about it. So I attended this conference with him. He invited me. He had already paid for it down in Philadelphia. I know that's where you're based out of.
Yeah.
And I went to that conference. It was a 3-day conference. Ron LeGrand was the teacher. He's still out there, I think, educating folks today. And when I went there, what happened is I met a lot of individuals. There's hundreds of people there. I met a lot of people that were doing what I thought were just huge things, right? Like they were either fixing and flipping homes, or they had rental portfolios, or a little bit of both. And what I discovered is that a lot of them weren't really necessarily smarter than me. They just knew something I didn't, right? They had some education I didn't. And so fast forward, we get back from this conference, and I had a ton of excitement. Like I truly felt that at this conference, I was like, man, this is it. This is the thing I've been waiting for. I can wrap my arms around this. Like, and if these guys can do it, I can sure as hell do it. And they're doing some big stuff. And I don't need a college degree to actually do it. Like, to me, like that was even more exciting. I'm like, I mean, I'll finish out this college thing, but like, I don't have to necessarily rely upon that to do what everyone's doing here. And to me, that was exciting in and of itself. So I came back, and I was tending bar at the time. I was going to school during the week, taking like 12 credits, like a light load. And I was tending bar Thursday, Friday, Saturday night. So I had a lot of free time during the day. And so I made David an offer that he couldn't refuse. I knew that if I didn't take action, I didn't know how to do that. I was excited and, enthused about what I learned at this conference, but I just didn't have all the pieces of the puzzle to put together. And so David did. He's already been down that road. And so I simply made him an offer he couldn't refuse. And that was basically go work for him for free. He was kind of a solopreneur guy. He had contractors, things like that, but he did a lot of things really well, and he did other things not so great. I saw him like struggle to return phone calls and be timely in that way. And that technology was a little bit of a challenge for him. So I figured I could help him in his business in a few different ways. And so he accepted the offer, and I essentially became whatever he needed me to be. I'd go drop off leases, pick up supplies, meet contractors, put signs out, for properties that were for rent or available. And so I did whatever he needed. And, in exchange for that, I spent a little over a year, like truly working with him. Any free time I had, I was in his office or out with him in the field, and I got to learn the business. I mean, literally from the inside out. I heard what he said, how he said it, who he said it to, why he said it, and it became a valuable, stepping stone for me to go out and buy my first property. So about 14 months after, of us working together, or me working for him, I guess you could say, I bought that first property with some bartending money I had saved up, and a private investor contact that David had helped me formulate over that year of him and I working together, and bought that first property. And that was the start of it. I mean, bought that first property just following David's, like, I'm not going to reinvent the wheel here. I'm going to do what he does. It seems to work for him really well. And that was the kickoff. Again, that was at age of 20. And then I saw that in order to actually create a meaningful amount of cash flow, you had to have a decent sized portfolio, right? And so like 1, 2, or 3, and I made good money bartending, but I wanted to find a pathway out. And so that pushed me to, the first couple of years I bought a couple properties, and I realized that wasn't going to be the way to do it. And around that same time, I moved to Florida, where I live now, and I met who became my second mentor, and he had about 700 homes, single family homes that he had in his portfolio. And it was that's what really opened my eyes up to scale. And so in my early to mid 20s, I scaled a pretty significant portfolio of single family stuff. And now around the time I started getting introduced to commercial, and fast forward many years, I only buy commercial now. And but I've owned just about every different type of assets. And it's been a fun ride, man. It's been quite a long evolution. I bought the first one at 20. I'm 46 today, so I've been doing it for 26 years, and I've seen just about everything. I've been now through, I guess you could say, 2 cycles. The first one kicked my ass completely, and I had to start all over again. And here we are today.
Well, I appreciate you sharing that, Kevin. It's interesting to talk to people who have been doing this for 25 years. I've been doing it for about 7, and I haven't seen, the pain and suffering, if you will, of going through like a real crash, partly because our government won't allow us to do that, right? That's a whole nother conversation. But I'm curious about the scaling quickly while being a bartender. And I want to hone in on that, because I'm curious if you think it's possible today. And I know it's a different time, but fundamentals are still true. The value of the dollar is significantly decreased, but like, how many properties did you buy as a bartender? And then also, like, what was the strategy? Was it you had a private investor who was funding these deals, and were they mostly buy and holds? I'm just curious about getting started in the beginning stages there.
Yeah, lots of good questions. I bought a total of 7 properties before I made the move to come down to Florida. And so, but to answer the second part, because it helps pull all the pieces together. David's business plan was to buy and hold, like everything he bought. He does, and he would do refinances every once in a while and pull money out and put new loans in place. And I realized very quickly that after that first property that, after it was all said and done, it maybe cash flowed a few $100 a month, that it was going to take me a very long time to accomplish, the cash flow that David had. And I also had just spent all my capital, as a down payment or, putting towards the property. So it was going to take a long time for me to save up another, X amount of thousands of dollars, as a bartender, and I wanted to find a faster path. And so really what happened is I morphed the model at that point I ended up selling that first property. So you could really just call it a fix and flip, because I sold it occupied with the tenant in there, to another investor that was at a different stage of their journey, right? They just wanted to kind of set it and forget it, cash flow, whereas I needed to actually get some chunks of money. And so I really morphed the business, not to an exact science, but really what would ultimately occur is I would, wholesale a few properties, sometimes fix or flip. Most of my business was either if I was going to fix it, I was going to keep it. And so a lot of times wholesale was easy, it was quick. And so I'd wholesale a couple properties, keep one, wholesale a couple properties, keep one. And then over the first couple of, it's like the first, I guess you could say 2 years, I was able to create like a real reputation, a track record. I'd use a private, ended up being a couple of private lenders. And it got to the point to where I wasn't necessarily putting my own capital into these deals. There was trust built, reputation built. And so that really allowed me to start having more decision power around how much I kept and how much I actually wholesaled. Because a lot of some stuff I wholesaled, I kind of wanted to keep. They were great properties, great markets, but I needed the capital. I needed that quick hit of capital before I could start holding everything. And so over time, that evolved. From that model to mostly keeping everything and then actually buying at a much larger volume and using private capital to do so. I think there was another question there. I forget what it was, but I think that answered two of them. I think
that was it. I mean, I really just wanted to know the ability to scale with not having a significant, I say significant. I mean, I know you can make a decent amount of money being a bartender, but just the ability to scale and building the relationships. And I was curious about how many you got with, and you answered the question. So, I mean, that was perfect.
I really hit the gas when I moved to Florida. I was 22. And that's when I met who's now still a very close friend of mine today, Rod Cleef. I met him and his brother, and they had a very, what I thought was I'd never met anyone with that amount of properties or that size of holdings. When I met them, they had about 700, 750 single family homes in their portfolio, and they had bought those homes literally in a 3 or 4 year span of time. It was absolutely mind boggling to me. And so that really opened my eyes. I became very good friends with them. We did a couple deals together. I flipped them a couple deals. I bought some of their stuff. They had some pretty widespread operations, all the way past Tampa Bay, and they were located about an hour and a half south of Tampa Bay. So we just became good friends. I helped them with their operations. I bought some things, sold some things to them, and I got to actually see, becoming their friends, I got to see behind the scenes of what a massive scale operation looked like. They had all their property management vertically integrated in-house, and obviously, as you can imagine, it was a full scale operation to manage 700 properties. You got maintenance guys on staff. Anyway, I got to see behind the curtain of how that differed to, my little measly portfolio that I had, right? And what it was going to take in order to scale. I could go buy the stuff. I sure as hell was running out of time in the day to actually manage it myself and just deal with all the chaos that ensues on a day-to-day basis with rental properties, right? And so anyway, that was when I was like, man, so what I did is I was able to, by befriending Rod's family and their business, I was able to plug into their property management system until I could get to a big enough scale to actually justify building it out myself. Because there's this weird kind of moment of time where, you don't have enough revenue. You got 20 properties, 25 properties. You don't necessarily have enough revenue to actually hire the team yourself internally for property management. And so you end up running yourself rampant to get to that point. And then you try to hire one by one to build out as you continue buying properties. And that wasn't the right way. That was just going to be a lot of headache. And so I essentially outsourced my property management to those guys and focused just on buying. And I just went gangbusters, buying a bunch of property, and ended up getting to about maybe 45 units, maybe 50, somewhere around that realm, to where I felt I had enough revenue to justify hiring a couple team members and actually putting my own infrastructure in place. And the good thing is, don't fix what isn't broken. So I was able to kind of see the playbook that they had built, and I just replicated it. I might have made some small tweaks here and there, but I just literally mimicked exactly what they had done because it was proven successful. And I built out our own internal property management company. And then just that allowed me to really focus on what I was good. I love doing deals. I love finding opportunities. And that's where I honed my focus. And we ended up, during that period of time, buying 122 single family homes, about 300 multifamily doors, like smaller multifamily type properties, over a period of, I guess, about 4 years or so, 4 or 5 years.
Love it.
And that scale really creates a lot of flexibility once you have quite a bit of top line revenue coming in. A full blown property management company built out. It gives you a lot of a leverage because you can really then hone in on what everyone's got a unique skill set. Like there's something that you're better at than anything else, right? And that's where you should be spending your time. It gave me the ability to really focus, let other people do what they do in the business that are smarter than I in different areas, that have more knowledge in specific parts of the business. So I can do what I do, which is finding deals. And that's what I did. I just went gangbusters and started bringing more deals into the fray. And it was a fun run.
Well, it's funny, Kevin. I met Rod about 2 months ago. Ryan and I were down on his podcast in Sarasota. It was awesome just to be down there. It was the first bigger in-person podcast that we've done. He was great. He was really gracious. So, but you mentioned about honing in on your skill set, and I can relate this to our story. Is I was buying small, single family duplex, triplex here in New Jersey and Philadelphia, and what I realized is that by building our brand, that actually built out our business because we had people on the podcast like yourself who were awesome at finding deals. And then we were able to parlay our skill sets to be general partners, bring the capital, bring the knowledge, help them underwrite deals and market it. And then that's how I was like, okay, I can grow this way a little bit faster by buying a 10 unit, a 20 unit, a 40 unit, than just trying to stack up these small single family and duplexes. I did it in a different way than you because you were the deal finder, right? And I built a community and a following of people that were like, hey, I know these guys have been investing in real estate for 5 or 6 years. Like, I trust them. Let's go partner on deals together. But I totally agree. It allowed me to step away from, if somebody's doing this full time and it's like their everyday focus, and I was managing my W-2 job, I'm not going to be getting the best deals out there trying to find single family and small multifamily homes, right? So I got to find somebody and align myself with them who was doing that. And so I love your story here. I want to touch on the commercial, like the jump into commercial, because you're known now as like a cash flow investor, and it's mainly focused on commercial. So like the transition there, and talk to me about the transition, and then also just like what you're seeing in commercial real estate today, and how it differs from when you started.
Yeah, no, absolutely. And there's a bunch of different types of commercial real estate. There's a number of different asset types that fall underneath that umbrella. But what had kind of occurred is as I was focusing on building out this single family home portfolio, we started buying apartments, and I was more of I was a GP in them, but I wasn't. I was bringing a lot of the money to the equation for a good friend of mine that had an apartment portfolio, and so I wasn't actively involved per se in that side of the business. And I think so I wasn't spending a lot of time doing that, but it was making a lot of money, and we were doing well. I was still focused on the single family stuff, and then also every once in a while deals would get brought to me. Like we bought a retail center, we bought an industrial building. And so like that became like my initial foray into commercial, the multifamily stuff, but then, some of the other asset classes, self-storage property. And I ended up buying just kind of piecemeal, an office building, a little bit of everything. And what I realized was, number one, just like the multifamily, I was able to put quite a bit more money to use, right? Like, just get scale immediately. And you start kind of comparing like buying one single family home, while you might have built-in equity there, but from a cash flow perspective, it took a lot to get to a meaningful scale in single family where I could buy one strip, a 10,000 square foot strip center, and literally that'd be the equivalent of 25 homes, right? And so that just started opening my eyes up to the bigger game. And then 2008 happened, and I lost pretty much my entire single family home portfolio. I lived down here in Florida, and it was kind of ground zero. Values went down to less than half in most areas of what they had been. Rents went down. Everyone says rents never go down. They absolutely went down. In fact, I think now we're seeing that over the past year or two. There's a number of markets where rents actually went down. There's concessions, whereas 5 years ago, everyone was arguing like rents never go down. They continue going up. Well, that just doesn't always happen, especially when you get, a saturation, oversupply of a particular product type. We had that down here. So, I lost everything and had to start over again. And so during those couple of years, 2008 to really 2011, while I was managing the chaos of the fallout, I finally got to a point where I was able to look back and reflect on like what worked, what didn't work. There was a lot of inefficiencies with my single family home portfolio. It's probably a little different today because technology has really helped evolve property management. Back then we had leasing agents driving all around, showing homes, no digital lock boxes back then, no digital showings, maintenance guys running all around. And I realized, comparing my single family stuff to the multifamily, that it was just, on a property management side, it was so much more efficient. And then you start looking at the commercial stuff, like our industrial building was triple net. literally had no maintenance requirements at all. And the retail actually was triple net as well. And I was like, man, what the hell am I thinking? Why did I keep doing, what seemingly was a less efficient, investment style? And I should have just poured all my energy into the commercial stuff. And so that's kind of how I made the determination in 2011 when I'm ready to rebuild now. I'm going to focus all my energy and I'm not doing the single families. It's so much work to buy one home at a time, right? I mean, maybe if you can go buy a portfolio of 100 properties, but one at a time, it's a hard way to scale. And so that's what really pushed me to focus 100%, starting over again. And then, by happenstance, we ended up in mobile home parks. It was an asset class I'd never owned. I'd never looked at. I didn't even know anybody that owned any mobile home parks. But in 2011, as I was getting my legs back under me, ready to kind of go to part two and rebuild, I met a guy by the name of Randy that happened to own some mobile home parks here locally, and he got me all excited, but just piqued my interest in many ways about the asset class and why he felt superior to multifamily and many other things. And so he got me excited enough that I committed to myself to go buy one, and maybe this is it. Maybe this is the next round. And I did that. I bought the first one took me a little bit. So 2012, bought that first mobile home park, and have now, our current portfolio today is about $400 million of parks. We've gone full cycle on, 20 various mobile home parks over the years, and have been doing now for, 13 years. So, I just found that was a faster way to scale, like kind of like, because like talking back to like the hiring a team and having, being able to focus what I'm really good at. I knew when I was ready to rebuild, I didn't have much money. Whatever happened next in my life had to work. I had to figure out a way out of this hole. And I sure as hell didn't want to go through the one by one property. And how can I get to a big enough scale quick enough to where I can start hiring some folks and really focus on building a sustainable business with folks that are in the organization that are better than than the departments that they're going to head. And so I knew the only way to do that was by doing bigger deals, and mobile home parks just became the way to do it. And there's a lot of other great asset classes as well, but mobile home parks, once I bought that first one, it worked out really well. I'm like, well, here it goes. We're going to pick this one. We're going to scale this one up in a big way. And that's what we did.
So I guess looking back on it, Kevin, it's kind of evident that this crash in '08 is one of the only reasons that you got to as big as you are today. Like you maybe would have been continuing on a single family route. Not that there's anything wrong with that. Maybe you could have more, but if it didn't happen, you wouldn't have pivoted this mindset. And I want to dive into this a little bit, if you're willing, just like what happened. People always tell me, and this is just like, I'm kind of wet behind the ears on this. They're like, I lost everything. I'm curious, like in '08, is this just like properties getting foreclosed on? Like the position that you got to where you were able to pivot. I just find so much like, those are the real conversations that I like to have, because there's so much in there of like, man, I really whittled this down. I had 40 plus doors. I had nothing. And then having to start over seems like that's where people give up. I mean, that's really where people are like, holy shit, real estate is completely not for me. Look what happened to me. But you made a different decision. I just find it fascinating.
Yeah. I mean, it wasn't an easy time. It was a very dark time. It was challenging. Couple of years, getting, knocks on doors multiple times a week, process servers, serving with another lawsuit. So, I mean, really what happened is, down here in Florida, I'm in Southwest Florida. Back then there was a boom on home builds and construction. And this is back when there was a lot of those, exotic loan products like pick a payment loans, and, anyone could fog a mirror and get a loan. Basically, you could buy a house. If you're a waitress at Denny's, you could probably buy 10 houses if you wanted, right? Like no doc loans. As long as you had good credit, you get a house, maybe more than one, most of the time, more than one. And so that fueled a boom of construction that basically was building homes for a population that wasn't here yet. Right. I mean, and so we ended up with this massive oversupply. And so essentially what happened is my cash flowing single family home portfolio not only did literally in a matter of like 8 months, it basically dropped half in value. And actually a number of areas went even below half of what they were at the peak. Some areas got as low as like 30 cents on a dollar. And so the values was completely gone, vanished within a year span of time, actually less than a year. But then, you got this oversupply of product. And so we had tenants that literally had now choices. A lot of these new homes that were built, these spec homes that were built, these guys started renting these things out because they're builders that are like losing their ass too, right? Like they got bills to pay. And so now you have this oversupply on the market, meaning that we have to lower rents, a lot of times give concessions, and we're battling with our, maybe a slightly older product type. And there's a lot of new product type on the market now that are available as rentals. And so it was chaotic. We went from typically, maintaining 97, 98% occupancy to down below 80% in a very short period of time. And then our rents dropped across the board, and in some areas about 30%. No more cash flow. It means that we're actually writing checks every month to make up the difference. No equity left. Had vanished, and it got pretty bad. No one knew how long it was going to last. Right. And so when this all first, when the bottom started falling out, most banks weren't prepared for it either. I mean, they didn't have, loan modification apartments. They didn't have this infrastructure in place to manage this chaos and this fallout. And so a lot of the banks that we mostly had commercial loans. So we'd go buy like 5 properties with private money, and then we would, do a cash out refinance with a commercial loan, go one bank, cross collateralize 5 homes. And we just had batches of commercial loans. Most of these banks weren't prepared for that, and most of them were not willing to work with us in the beginning stages of this chaos. And so it got to the point where it's either I'm going to keep writing checks for $20,000 and $30,000 a month out of my own savings. That's going to be depleted in short order. Not knowing if the values will ever come back, knowing that we can't refinance. There's not an option to refinance. So we got really pushed into a corner to where we pretty much had to make a strategic default decision. Like, I'm going to be out of money, and we're still going to have properties that are negative cash flow. Like, it's kind of inevitable. No one knew how long it was going to last, right? Now we know it lasted quite a long time. Yeah. And so it was more of a strategic default decision that we had to make. And so, there was just maybe a handful of banks that would work with us, but most wouldn't. And so we had to hand keys back to properties. I lost my own primary residence in foreclosure. My credit was absolutely, I was personal guarantor on the majority of these loans, right? And so I had tens of millions of dollars of loans that I had signed on. And so, personal assets of mine got garnished, bank accounts got garnished. I mean, it was a really, really challenging time. And so not by choice, but I guess you could say kind of by choice, but there was not, I didn't see another option at that point in time.
Well, I appreciate you sharing. I think, and I just want to point that out because it's, I've heard a lot, I've interviewed a lot of people, and they say I lost everything, but to get into the weeds of how this happened, and because I wasn't, I was senior in high school, right? Or junior in high school at the time. So I didn't see this. I know that the economy was bad. I understand from a fundamental standpoint what went on, but to understand the actual ins and outs of what transpired and the decisions that savvy business professionals had to make, and then to see the turnaround too, you're looking at a hindsight now, it's wow, what a cool story. I know it was not cool during the time, but it's just, I appreciate you getting deep on that because, I honestly don't, to lose your primary, to lose these things that are you buy real estate for the stability aspect, and then to have that wiped away. It's just
it taught me a lot of things. Yeah, it taught me a lot of things. There's things I definitely wouldn't change. One was, I had great credit, had lots of, I could go get a loan for pretty much anything. Right. And when the home started defaulting, all the credit lines I had, like American Express, any credit card I had that had credit limit, they just shut it off completely. Not because I defaulted with them, because they saw what was happening with the other loans that I was personally liable for. And so it went from having, a lot of credit and a really good credit score to not just losing these homes, but actually losing every Discover's the only credit card that actually kept it didn't shut me down. But they limited me down to $500. That was my credit limit, which doesn't buy you much. Right. And so my credit score ended up, I don't know, I stopped looking at it for years because it was in the 400s, right? It was as low as it could possibly get. And so what it taught me though, is that I had to figure out a way to get much more creative when it came time to kind of start over again. And so I couldn't just go to a bank and get a loan. My credit was absolutely shot. I still had judgments I was working through on my credit report. And so it forced me to get, number one, not rely upon credit. I couldn't even go get a new car. I literally drove the same truck around for a very long time. I couldn't go get a new vehicle if I wanted, unless I was willing to pay cash, right? So if I didn't have the money, I wasn't buying it. And then when I started buying real estate, the second time around, it forced me to be incredibly creative, and get creative with owner financing and just negotiating deals that would that my credit wouldn't be prohibitive on me getting done. I couldn't go to a bank and get a loan. And so I had to figure out ways to get into deals where my credit wouldn't be the issue, wouldn't be the roadblock. And then again, but I still took time. And honestly, I don't think my credit probably fully turned around to where I could go get a real bank loan. I think it was probably 2015. Wow. Not that long, really in the grand scheme, not that long ago. It took a good 7 years for me to really start rebuilding it enough to where I could show a bank like I'm good. I fixed a lot of these old issues. I worked out a lot of these judgments. I paid them off over time. I made whole with a lot of these lending institutions. Didn't have to file bankruptcy, so I had a little story there that I could tell. A lot of folks I knew, they filed bankruptcy and just, erased all the judgments, and I worked through them. I didn't want to do that. And I wanted to figure a pathway out to just get this stuff made whole. And because I knew that if I had to file bankruptcy, that'd be very difficult in the eyes of any lenders. Even once my credit was rebounded, for them to look back and say, "Well, shit, like you took the easy road. You just signed a piece of paper and it all went away, and all the banks were left holding the bag, not you." And so that's what we did. And it took time, and it was like one foot in front of the other. I met my wife in 2008 before I defaulted on everything, which is interesting timing for her. Because I met her and I lived on the water, had boats and all this cool stuff, and I let her know about a month and a half into us dating. And I was like, man, I felt really good. I think she's the one. I was like, but I don't want to take her along this ride. In my mind, I'm like, shit's about to fall apart, right? And so I just had an honest conversation with her. I told her how bad it was probably going to get. I don't think she really comprehended, the severity of what was about to occur. But she stuck with me and supported me through it. But I mean, it was a number of very, very tough years to get to the other side. But in any event, I wouldn't change it for the world. If you'd asked me that question, like what was happening, I would say absolutely. But the funny thing is, like, I finished my associate's degree. I never actually got a bachelor degree. Like I told you in the beginning, I wasn't really academically driven, and this became my thing. And so honestly, I felt this was my only path. I really enjoyed real estate. Like my back was, against the wall. I was in the corner, and like, I was like, I'm really good at this. I mean, a lot of people I know that were smarter than me lost everything during this crash. I don't think this was a me problem. I think I could have done some things differently, but like, I don't think it was really just a me problem. And I feel like real estate's my only way. Like it worked once. Let's just learn from those lessons and let's do it again. And, I don't think I'm employable. I'd never had a real job. Bartending is about the closest I ever got to a real job. And so I went back in for the second round and just tried to be, more mindful of every, not that I wasn't before, but just every decision that we made. Debt's the only thing that could really crush you. So today we're super conservative. We're always incredibly low leverage with our debt. We don't take adjustable rate mortgages. Everything we buy with a 10-year horizon, if not longer. So like we don't do short, it's a good deal. If we got to get in and get out in 2 years in order to make the economics work, we don't do it. We pass and we move on. It's a long game. Right. And so, and that's how I went about rebuilding, is that this is a long game. I'm going to be in this now for 10, 20, 30, 40 more years. And so let's just make better decisions, build a better team, around it. And let's do just better things in general. And how we did that was mobile home parks.
I venture to say, Kevin, that I was having this conversation with my fiance recently because I left my full-time job about a year ago. And this past year's been wild. Like, I've had some great months. I've had some bad months. The real estate supports me very baseline level. As you know, it takes a long time for cash flow to really work, right? I get great tax benefits and the appreciation. My net worth's going up, but the cash that I have available is, it's been wild. I should say. And I think I parallel that not to your story because, you were in more dire straits, but just, meeting your future wife during that time frame. I feel like that's how that's the person that sticks with you through that. Yeah. I told her, I was like, this is you signed up for this in a way. You know what I mean? Like she met me before I left my job, and I'm like, I'm going to leave my job and this is what I want to pursue. I also feel like I'm mentally unemployable as well at a different level, but it's funny. I think that I appreciate you sharing that. It makes for such a cool like bond that I'm sure that you and your now wife have, and that you just went through that together, as opposed to meeting her now when it's like, I'm sure things are a lot better. So it's cool.
No, it's funny. We were just talking about it the other day. The funny, she doesn't remember it the same way I do. I mean, I guess it wasn't as sensitive to her as it was to me. I mean, she still had a job and, she was employed and all that. Right. So like, but we, a number of months in after defaulted on a number of loans, I told you that my credit cards cut me off. And so basically it was whatever money I had in my own personal bank account with a debit card. Like that was what I had. Like there was no putting anything on a credit card. And so we were at breakfast one morning and across the street, there was a little car wash, and I took my truck over there, before we walked into the restaurant. it was like a $20 car wash, right? I don't know, wasn't much. And we went and had breakfast. And then we came back to get my truck, and I gave my debit card because I knew I had money in there. I had, literally like $30,000 in there. Right. And that was like what I had to my name. And they're like, no, that's declined. I'm like, I just know that I got the money in there. So like, can you run it again? I called the bank while I'm standing there, and the balance was negative like $300 some odd. One of the banks came and garnished. I thought I had it, from advice from legal counsel. I thought I had it in a account that could not be garnished, and it got garnished. And so my girlfriend at the time had to basically pay the car wash to release my truck so that we could drive home. I'm like, I kind of warned you. I didn't think this was going to happen, but this shit's bad. Like literally the money I had, like it's gone completely, 100% of it. I have nothing at this point in time.
Well, it's wild, man. And now I want to get to some of I know I dove a little deeper. I want to get to some of the better days ahead, let's talk about some of the, like, maybe if you could pick a commercial deal, because I'd love to talk about the structure of some of these deals, whether it's a mobile home park. I know you mentioned like you've done a ton of different deals, a ton of different asset classes. I love to hear about how you structure the loan. You mentioned to me just 5 minutes ago that you had to get really creative. So like doesn't necessarily have to be the first deal that you got back on your feet, but maybe pick one, just talk to us about like how you found it, what you purchased it for, how it was structured. I love for people to hear, hey, even when you get your card declined for $20, like Kevin got creative, and like you're never in a position where you can't recover. And I feel like that's kind of where the moral of this episode is going to. And obviously you're in an amazing position now, but tell me about like, pick a deal. I'd love to hear about it.
Yeah. And every deal is a little different, right? I mean, and I'd say that probably today our business, it's a lot dependent on the market as well. But we don't do as many owner finance deals as we used to do. And most of the reason is that a lot of stuff we buy today is more of a larger, like institutional quality. And a lot of the sellers they don't have the flex. They're not like people that have owned it for 40 years, own it free and clear, right? It's just a different profile of owner that we buy from today. And so it just doesn't lend the option to do, creative owner finance strategies. But with that being said, I don't know, I'll give an example of maybe the second mobile home park we did. The first one was pretty creative, but we brought like a private lender in, so it wasn't like owner finance or anything like that. But the second park we bought, I bought it from the gentleman that actually had developed it, many decades prior. I think it was $1.1 million. It was the purchase price. This is a funny one because it just, what I found with a lot of these deals that we did owner financing on, it came down to how much of a rapport could we build with the seller. To get him to be flexible with financing terms, and also finding out, was this a win? What is their situation? Do they have the ability to do it? But also, can we make sure that they understand that this is a win for them as well, right? As relates to their capital gains and the taxes, how it's going to, what their exposure is going to be when they go to sell this thing, versus that they just sold for cash and literally didn't have a plan for that money, right? And a lot of folks that we met back then, like they didn't have a plan for money. They just wanted to cash out. They were going to get smacked with massive, gains. And we're probably going to go let their money sit in a bank account. And so a lot of it came down to just finding their personal situation, understanding it, and explaining to them the idea behind owner financing and how it was going to be beneficial for all of us involved, right? But so the second deal, we negotiated originally to put 20% down, so a little over $200,000. And funny enough, like 2 weeks before closing, the guy called me, the seller, his name's Herman. He's like, "Hey guys, I know that we've already agreed upon 20% down, but like based on like my tax situation, it would actually be more beneficial if you gave me less down." So we ended up giving $100,000 down. That was just enough to cover his initial tax hit. And he didn't want to take any more than that initially, because he would have had to pay taxes on any additional amount and above that 100,000. So we got that one for $100K down. And then I also negotiated no payments. This was it was not a massive, but it was a turnaround property. And we didn't have 2 nickels to rub together. So this was like bare bones budget as far as exercise or execute on the business plan. And so we negotiated with him 6 months, and we explained why 6 months of no payments, and that we would basically tack those 6 payments onto the back of the loan, in which we agreed upon like a 5-year balloon. So we would pay him out at the end of 5 years, and we would add those 6 months of payments from the front side to the back side with some interest included and all that. So it was, incentivize him to actually agree to that. So that's what we did. So we took the first 6 months of cash flow. When we bought the property, it was 131 spaces. There were only, I think, 76 that were occupied, like paying lots that had homes on them that were paying to live there. And we used that first six months of cash flow to pay for a lot of the improvements that we made inside the community. We repave roads, fixed things, lots of lights. Just lots of more cosmetic improvements than anything else, just to enhance the place, make it a better place for folks to live. And then, over the period of a couple of years, we brought a number of new homes in, and, infilled those vacant lots. And we owned that park for about 9 years. And my business partner, I had a different business partner than what I have today, but my business partner at the time, for whatever reason, we could never get on the same page about us infilling the rest of the lots that were there. And so we never fully realized the full value of that property, but we bought it at the right time. We bought it with the right financing. When the year 5 came with that seller, he actually agreed to extend the terms of that seller held note. He was making money. He was happy. We paid him on time every month. And we ended up selling, we sold the property. I think it was 4 years ago we sold it. So we owned it for, call it 8 years, give or take 9 years, paid 1.1 for it. Ended up putting probably about $500K into it, as far as like improvements, upgrades, what have you, over the period of time that we owned it. And we sold that one for, I think, 5.8 million is what we ended up selling it for. And honestly, I know who we sold it to. I actually know the guy we sold it to. He's another guy in the industry, and he took it and basically infilled all the remaining lots. And my gut tells me today that he probably bought it for 5.8. He probably put another 2 million into it. So he's into it for 7.8. And that property is probably worth every bit of 12 million bucks today. So
I understand what you're saying now about the math on like buying bigger deals, and like think about the fact that you put $100,000 down. Now, to people listening,
and I'm not gonna set expectations like you could go do that today, but just don't assume that happens every time. That would just, the timing was right, situation was right, circumstance was right, and it was a win-win for all parties. But I would not set expectations that you're going to be able to go put 10% down on big deals like that.
No, I don't want. Yeah, again, I don't want to set false expectations either. But I think the point is that you can put $100,000 down on a $450,000 duplex that has no opportunity to 5x in 9 years, right? Like,
yep.
Not no opportunity, but it would be very, very, very hard pressed to do that. And you're putting 25% down on 400,000. So I agree. I figured you'd share a great deal, which makes a lot of sense. But just to open people's eyes about how, the improvements that you put into this property, the leverage that you can exercise can just exponentially grow this asset. And one of the questions I have is that, were these properties local to you that you were buying? Are they all Florida, or where were you buying them at?
No, nothing was local. The first mobile park we bought was in Atlanta. So it's an 8-hour drive, so far away. And I literally drove every week up there for like a day or two and ran crews and all that. So the second one that I just gave you that example of, that was in the Raleigh, North Carolina area. So definitely not even a drive, but a little easier to fly from where I live. So no, it's just, but the thing is like, once you have a large enough size property, the first one we bought was only 34 spaces. And so probably not the best example. We did have an on-site manager there, but like, you can only pay so much, right? And you get what you pay for as far as quality of a manager. And so we couldn't really pay a full like living wage to the person that ran the day-to-day on site at that first community that we bought. However, the second one, it made enough money to where we had a full-time manager that literally worked, 40 hours a week, and she was eyes and ears. She would help us, help meet with vendors and collect rent, process rent, scan checks in, things like that, hand out notices. And so it made it quite a bit easier to be a FAR, and it forced us to put systems and processes in place that would, allow her to have support she needed without us having to be there to hold her hand all the time. So, but, in the first year of owning that, I was up there all the time because we were, renovating units, upgrading the infrastructure, putting signage in, spending quite a bit of money. And that money, we had to ensure that it was being spent responsibly. And so we were up there quite a bit, and would just literally take a budget Allegiant flight, whatever days they were flying, and, get in and out, and stayed in the trailer while we're up there. Like, had one of the units it kept vacant, renovated it, and that's where I'd sleep. I didn't have money to go get a hotel, so I'd sleep in a mobile home, while we were on site.
Yeah, I got to tell you, I really appreciate you sharing the ups, the downs, and everything, and just like it's a very real conversation. A lot of people come on here, and we try to vet our guests well, but the real estate investing world can be a lot of like, look at me, look what I did, like, look at, and it's just, I kind of just get sick of it. That's why we do our podcast, to get a long form conversation, because how marketing goes. Anyone can say, anyone can say that they're 22 and have a Lamborghini, right? Like, it's just, it may or may not be true. So,
yep.
I want to talk about what you're focused on now as we kind of wind down a little
Yeah.
bit. Like, what are the things that you are looking for? Are you actively buying? I know you have a book, The Cash Flow Investor, How to Create Financial Freedom, Investing in Commercial Real Estate. So that's awesome. So if you're listening, check out that book by Kevin Bupp. I'm sure you can buy it anywhere books are sold, but I'll let you talk about that. But just tell me about what you're focused on now and what you're seeing.
Yeah. So our company today, Sunrise Capital Investors, is the name of our investment firm, and we really, we stay, core to our focus. And so up until just the last couple of years, we were only focused on mobile home parks. That's what we still buy them today, but that was we try to stay our lane and just become experts at one thing instead of diluting our focus. I think that's important to, and there's plenty of folks out there that maybe do a lot of things well, but it's just very difficult to be an expert in multiple different asset classes and build big divisions out of each. And so we decided to stick, with mobile home parks. Lots of, fundamental reasons why we love the asset class. And so we did that up until about 5 years ago. And we've added a second vertical to our business model where we buy parking. So parking lots, parking garages. Mobile home parks still make up the majority of our portfolio, but we've got, decent sized holdings in parking in a number of major cities here throughout the US. And so those are the two spaces that we spend our time, energy, and focus in. We're still buying today. We've had a great last couple of years. Bought some great assets. We sold a number of mobile home parks over the years. And we're I always say that we're always kind of contrarian, so like rates were really low late 2020, 2021, 2022, and everyone's buying like gangbusters. We had a hard time making deals pencil out. And so while we did buy some great deals during those years, we actually sold more than we bought because we couldn't even make sense of what the offers were we were getting on our properties. I couldn't underwrite something and say, how the hell are they paying that? Like, I don't understand. So if they're willing to pay that much, let's just sell it. And so we actually sold quite a bit. But what happened is, and I'm not going to say I had the crystal ball to know that this was going to play out, but when rates started going back up, everybody stopped buying. And a lot of folks realized very quickly that they overpaid or put, more risky loan products in place that now put them in a situation where they couldn't buy. Their equity dried up. They were dealing kind of damage control. Well, 2023 and 2024 were like the two largest growth years that we've ever had because we were able to buy and had capital to buy when others weren't. And so we just went on a buying spree with whatever made sense. We scooped up. And so we bought a number of great, parking assets, a number of great mobile home park assets. And, we're a group that our capital doesn't require us to allocate a certain amount every year or go buy a certain amount of property. So if it makes sense, we'll buy it. If we can't make sense of it and, a year goes by or 2 years go by, then we don't buy it. We don't buy anything. So we're just kind of, real estate, it's a long-term game. Slow and steady really does win the race. And so we're just, one foot in front of the other, make sure that we buy great deals that fit our long-term investment thesis, that are good for our partners, our investors that have come along for the ride with us. And I don't think a year's going by where we haven't bought anything, but definitely there are a couple of years slower than others as far as buying activity, but it's been pretty busy behind the scenes here.
It's fascinating to me that, you hear a narrative and you think, there's no deals out there. Meanwhile, during those years when people were saying that is when you were buying more. And I find that to be, it's typically like I think it was Buffett, right? Be fearful when others are greedy and greedy when others are fearful. And I found it to be true. I was buying more we bought our 18 unit in 2023. We didn't buy anything in 2024. And then in 2025, we bought a 10 unit. But that was because kind of like you said, I don't want to buy something just to tell people that my unit count is going up. It's like, that doesn't make a lot of sense. It's just, so I think it's really cool. And people should be listening to this episode. Like, hey, if people are telling you that this is not a good time to buy, you just look a little bit, read between the lines, look a little bit beneath the surface. And then also, does that mean that your market geographically, your asset class, there's so many things, the creative way that you're looking at the deal, all these factors play in as opposed to a blanket statement that it's not a good time to buy. Yeah. So you
just might have to look at, you have to look at more deals. You have to turn over more stones. Someone asked me the other day about how many deals we typically underwrite in a year. And we keep a running sheet of, first, like how many deals get first blush. And then we can quickly say, we're not even going to waste time, sending it to our analysts and having them, run a full model on it. But how many deals do we high level look at? And then how many actually do we feel are we're interested enough in that we'll hand it to our analyst team and they'll spend hours on it. And then out of those, how many do we actually make offers on? Then out of the offers, how many do we buy? Right. So I was actually off, I guess, the number, and I looked at our document. We've looked at, it's like 230 deals this year, at high level. out of those 230, I think it was roughly like 50 or so that actually we felt intriguing enough to send to our team to spend hours on, right? Run a full model on it. And then out of those, the majority that we underwrite, we do make offers on, but some we realize once we're done, like there's such a big delta of what the seller's expecting to get versus what we're going to pay. Very few times do we not make an offer. If the delta is really wide, we don't even make the offer because we don't want to insult anybody or get the brokers pissed off at us or whatever. So, but typically, we'll make an offer on about 90% of things that we underwrite. But as of this year, we've got a lot of stuff under contract now. But as of like the first half of the year, we only closed on 2 properties. Mm-hmm. They were great properties,
1%,
but we only closed on 2 properties.
Yeah.
And we got some pretty cool stuff under contract now. And that seems to happen. Like our second half of the year is typically more stout than the first half of the year. Transactional volume is always much lower, like the first quarter of the year. People get out of the holidays and they're, just, I don't know, everyone's slow to get moving again.
Yeah.
But yeah, no, we look at a lot of stuff. So like, I would say that number was very different 5 years ago. Like we didn't necessarily have to look at as much to find deals that worked. And so what I found is like the last couple of years, anyone that has sold or, anything that we've bought, maybe it wasn't a distressed deal, but there was a reason pushing the seller to sell at that time. Cause like it is definitely not an opportune time to be a seller over these last couple of years of rates being high. Like property values have gone down. It just has, right? It's the nature of the beast. And so it's just being able to find those sellers that actually have a reason that they either want or need to sell, like, and being sure that we're the buyer that's best suited and has got the capital to close. And, it's been a less competitive environment. So like not as many buyers going up against us. In fact, I don't know. There's probably a number of those deals we wouldn't have been the chosen buyer on if it was a couple years prior, because we're never the highest payer. We'll always get the deal to the finish line. We always, work really hard not to retrade or renegotiate pricing. But we're typically not the highest payer. And so a lot of times sellers want whoever's the highest. That's it.
Yep.
That's all they really care about. Right. Which, no fault to that. But we, just again, back to slow and say, you just got to know that it's a long-term thing, man. Like there's going to be years you buy a lot and years that it's quite a bit slower. But honestly, it's allowed us to also, we've hired, we've been able to, talent was really hard to find, during COVID, earlier years of COVID. I mean, and so we've really also put emphasis on the last 2 years, really bringing in some great talent because it's out there now, right? Like the job market's a night and day difference from what it was, 3, 4, or 5 years ago. And so we've been able to attract and bring on board some just killer talent from other organizations that had to scale back. And they had to start, letting go of workforce and, trying to just cover the bills, right. And trying to keep it as lean as possible. So it's been a fun couple of years for us all around, like deals we bought as well as team that we built out. And, just again, to your point, like the quote you gave with Buffett, right? Like be greedy when others are being fearful. Just like find ways to actually take advantage of the situation and just don't follow the herd, go the opposite direction of the herd. Cause typically, you got one person that's guiding that herd, but the rest are just following along,
Yeah.
Making comments like no deals out there, right? Like what the hell does that mean? What do you mean there's no deals? Like there's transaction happening. Maybe if you're comparing it to how many transactions happened in 2021, then you could say lower transactions are occurring, less home sales are happening, but people are buying stuff and people are selling stuff. So be one of those people.
Without a doubt. This is a cool peek behind the curtain of somebody who's been doing this for 25 years, and I think people get real estate wrong. They're going to buy a few properties. They're going to be able to leave their job. Now, while that's certainly possible, I just think that every time I turn around and look at the last 5 years, I'm so glad I bought I'm so glad I did that deal. I'm so that, you know what I mean? Yeah. But like when you look at it at a 6-month or 12-month or 18-month time frame, it's like, okay, this thing's moving. It's you're like pushing a boulder, right? And then as you get down the hill, it goes a little bit faster. For me, this is actually my last question here. I think you've been through and you've explained it. You've been through a lot of ups, downs, left, right, like having to reinvent yourself multiple times, multiple markets. I'm very curious about your why, like the thing that gets you out of bed every morning today. Even you mentioned you're 46. Yeah.
Yeah. 46.
46.
Yeah.
So, I mean, like, you're just getting warmed up. Like this thing is still, so but you've been doing this for so long, and it's like the fortitude of every day to get up and do this and move the ball down the field. What is the thing that pushes you forward?
Yeah. I kind of bifurcate it personal and professional, right? Cause there's a couple whys on each front, but, on the professional side, like, I guess first and foremost, I love doing deals. I'm just like, I enjoy that aspect of the business. I really enjoy my business partner, like the other half of our organization. He's phenomenal. We're a really good yin yang, like our very complementary to one another. And I think we built something pretty cool. So that keeps me excited and energized. The team that we've brought on gets me energized as well, like just an alignment of interests and really believing in our core values as an organization, and knowing that we work really hard to hire the right people that fit within those parameters, and that they kind of, like, I don't know, like the energy, it creates an energy that just gets me rolling, right? Gets me excited. And so, like, for all those reasons, on a professional side, just, we love it. And I think the last piece to speak to, like, honestly, like the asset class we're in, manufactured housing, like, we really do get to provide, I think, one of the most affordable, not by no means lowest quality, because a lot of our stuff's way nicer in the apartment complexes that you would find in any respective area that we own something. But we get to offer basically the lowest cost unsubsidized housing in any market that we operate in, and a lot of this stuff is built the same quality as the stick built homes are nowadays. It's just made in the factory, right? And so we get to provide clean, safe, and affordable housing to tens of thousands of families across the country, which I think is pretty cool, because there's a major shortage of it, right? The cost of living is so high now, and so we get to kind of make a dent a little bit, maybe not a major impact. We get to make a dent in the affordable housing crisis, which I think is pretty neat. And then on the personal note, honestly, for me, it's we've all got 24 hours in a day, 7 days a week, right? And I've got two young boys, 8 and 11. My wife, Joanna, is trying to, none of us are promised tomorrow, right? I'm at the age now where I've had, people around me, close to me, that are similar age, that have had major health complications, life cut short, a variety of things. And it's just trying to build an organization that buys me back time to not miss important family moments, create memories with my wife, my kids, and the only way to do that is to build a sustainable organization with the team that we have, right? And so, like, they work together collectively, but, like, for me, I love spending time with I love traveling. We travel a ton. We create cool experiences together, memories, and that's it, man. Just I sacrificed earlier on to do that. My oldest was young, a baby when we were buying those first parks, and I was away a lot, and I sacrificed for a number of years, like, not to be around. But now it's like, how do we buy back that time to now be around as often as possible, and to have flexibility to do what we want to do. We want to do it on our own terms. So.
Well, that was a great answer. I'm fortunate enough to have these conversations with people who are a couple years ahead of me, and it doesn't matter the age. I mean, there's people that are just crushing it and that have whatever, more money, more freedom, all of that at my age or even lower. But just to be able to have these conversations prior to me having kids, I wouldn't call him famous, but like a well-known real estate creator passed away recently. I'm not going to say names, but I saw it on Instagram, and he was your age, I think, 45. And I was just like, man, to like build this thing and be so locked in all the time, to not be able to, I'm hoping that he did enjoy time with his family, but just to forget what it's all about and what it's all for is like, it's one of the biggest mistakes. So I'm fortunate, like I said, to have these conversations with people that prior to me having kids, to knowing what I really want my life to look like, so that, a couple other M's in the bank account shouldn't mean more than the lack thereof time that we all know that we have. And we talk about that a lot in this pod. So.
I mean, when you're laying on your deathbed, no one ever laying on their deathbed has said, I wish I would have worked, wish I would have worked more. I wish I would have made more money. It's like, I wish I had another day on this earth to spend with, whoever's by your bedside, right? Like, that's literally it. Yep. All that other stuff goes by the wayside immediately when your health fails you. And so, now's the time, take advantage of it. And the kid thing is crazy, because before I had kids, everyone tells you that's to your senior that's already been down that road, like, it goes so fast, right? And now I'm that guy. I'm like, damn, like it actually, if there's, I'm not an anxious person. I handle stress quite well. If there's any angst of anxiety in my life, it's because how fast my boys are maturing. Like, my 11-year-old, the kid's like self-sufficient now. Like, literally, he doesn't even need help with his homework. Like, he's super bright. But I'm seeing, every day goes past, he needs less support from me, and it's cool to watch him grow into a teenager and then an adult. And I'm excited about that time of his life and being a part of that. But like, it goes so damn fast, man. And so, like, the only thing you can do to not necessarily slow it down, but to do a better job of capturing those moments is actually have the time to actually capture it, right? Like, and so buy yourself some freedom and flexibility with your schedule, so that you can spend as much time as possible with your
Yeah.
family, especially your kids when they're young.
It's brilliantly said. And Ryan has a 2-year-old, and those are some of the years that you 2 to 8, whatever, you don't get them back. Once they go,
No.
that's what I've heard. It's like those are formidable times where like you get to really bond with your children. And so I'm looking forward to me having to implement all the things that people have told me to do. And I had a family group chat today, and my cousin, we're getting together next week, and my cousin is turning 10. And I literally responded to the text like, wait, she's going to be 10. I thought she was going to be 6, like it's just everything. It's just unbelievable how quickly things go by. And I'm not even in the point where it's going to accelerate. So anyway, I could talk to you for hours, man. This is really, really a cool conversation. I really, really appreciate your time. If people want to learn more about you, they want to follow you, social, get in touch with you, buy your book, what's the best way for people to get in touch with you?
Yeah. So if you want to learn about our company, what we do, we got quite a bit of resources over there as well. I've been a longtime podcaster as well. I've been running my show for over 11 years. And so you can download it on our company website. That's investwithsunrise.com. Again, investwithsunrise.com. You can see our offerings that we have, see past deals that we've done. We got case studies that we share up there. I'm pretty active on all the social fronts. I'd say I'm probably mostly active on LinkedIn. My last name's fairly unique, Bupp. So if you just type in Kevin Bupp, I'm probably the first result that pops up there, and probably the only one that's in real estate. So it shouldn't be too hard to track down.
Love it. Thanks for your time, Kevin. This was awesome. Great to get to know you.
Yeah. Thanks, Corey. Much appreciated.